All right, welcome back. Let's ramp things up here by looking at the new week that started on Monday and explain what we need to do when a new market phase is reshuffling. Okay, so we are going to do something that goes somewhat against our rule, but we have only one explanation for this, and that is called trend. When the market is trending, it does something that sometimes would make your entries to come late or make your entries not to come at the right entry prices if you follow our conventional rule for impulse break and exit price line break. So what do you do when looking for an impulse entry? So the first thing to do is to find the buyers for each day. Find the buyers for each day and apply this entry rule. So first thing is, in the beginning of the week, which is on Monday, you look at which entry do you see first or recognize first based on our entry rules. So if you look at the chart here on Monday, you notice that the first entry that appears here is a bullish entry because we have a fragmented move that was bullish. So fragmented bullish move gave us an indication of first entry being bullish. Now, when you take an entry in the bullish bias, if your entry goes into profit, then you start looking for bullish entries for the day. At the same time, how to find your bullish entries will then be based on what you can recognize here, which I will be explaining in this tutorial. I haven't got the first entry candle for the day being a bearish entry, a bearish candle, which of course came in at the right entry place for a bullish entry. The next thing to look out for is bullish fragmented moves, or rather bearish fragmented moves that should have given you bullish entry. Then your entry candle for a sell will become your entry candle for a buy, and then your exit price will be the same 10 pips below the entry price, 10 pips below the entry price, while entering on the opening of the third candle. So this is to say that in a market where you are expected to sell, where the entry candle is for a sell, you take an entry for a buy. So we are going to demonstrate that in the phase of the market called the trend phase. Okay, so this was the candle that began the day, and this was the first entry candle for a buy because this was a bullish fragmented move. Now, taking your first entry on the opening price of this candle, your exit remains when an impulse is terminated. So, held from here up to the first impulse termination, that was a profitable entry for a buy on a bullish run. Then, in the course of that, there was a bearish formation, a bearish entry formation, which you already know that you are now in a bullish market. So, following the rule that I explained, when you see a bearish formation, you know that the market has gone down to find support. So, what do? Where you are supposed to take a bearish entry, you take a bullish entry because that is a recognized support. It will serve as a turning point. The reason for that is since in a proper bearish market, your third entry candle always goes opposite the bias of your entry. Now, in a bullish market, that entry candle that goes opposite the bias of your entry, intended entry, would become your correct entry price for a bullish, or yes, would become your correct entry price for the bias of the trend, which means the bias of the trend phase. So since this was a bearish fragmented entry, rather bearish fragmented move that's supposed to give you a bearish entry, it will now give you a bullish entry. Then you hold until the level is, the impulse is broken. Then you look again for the next entry. So now this was the next entry, the third candle for a bullish entry, held also to the end of that impulse. Then what happened? You see another bearish fragmented move, and as we have explained, your entry candle becomes the candle that was supposed to be for a sell. Since you are not selling, you are going to buy wherever you see a sell entry opportunity. The same thing applies to when the bias for the trend is bearish. You are going to look for bullish fragmented move, and where you are supposed to buy, the entry candle for a buy will become a sell entry candle. Will become a sell entry candle, and you look for also. Then also when you see a sell entry, you enter properly on a sell entry. But when you see a buy entry, you enter also on a sell where you see a buy entry. So that is how to trade the trend phase. And keeping to that, you can observe until the phase goes into impulse. So now for the Monday, of course, stick with the 1 hour time frame to avoid having conflicting information, and stick with the 1 hour time frame so that you don't miss out on the move. Now we had the correction completed move. Since we already understood that the market will be in a bearish correction, we traded only bearish entries during the correction. And now we are projecting that the market will be bullish. And of course, the week started with a bullish entry. So having given us a bullish entry, we'll take a bullish entry wherever we see a bearish fragmented move. And we also take a bullish entry wherever we see a start of a bullish impulse. That is on the third candle of a starting bullish impulse. So those two rules we need to be followed, and we can now assess and see how it goes. Okay, so looking at the bearish fragmented move here, you take your buy on the bullish, on a bullish bias, because that is where you're supposed to take a sell. So you take a buy there, and the stop loss is 10 pips. Then you know the third and fourth candle rule, it also applies where you were also expecting a bullish impulse that gets terminated. Now we also have the impulse termination line or exit price line, where you draw an exit price line. So all the rules for entry on the first candle that breaks the exit price line, you also enter it in the same order for a buy. Okay, so this was for a bullish market. Entry price at 1.2240. Stop loss will be 1.2230. If it goes into stop loss, then you know that one was not for you. So this very entry here, based on what we've explained, went into stop loss, and that was not for you. Then where do we find another bullish entry? We have the third bullish entry coming from here. The third bullish entry coming from here, because all of this move happened without giving you any structure for an entry. So the next bullish entry came up here and was terminated here, also in profit. Then this is Tuesday, a new day that has started. Again, following the rule, we have seen a bearish fragmented move here. That's the first entry for the day. Now, because we are already trading a bullish trend, and the trend projection is 100 pips minimum and 200 pips. Okay, we have 50 pips minimum. Then we have 100 pips optimum and 200 pips maximum. So the first move for the day went completely above the 50 pips expectation from the first entry candle, fourth entry candle 1.2226 all the way to 227. So that was 50 pips for the day. Then we still have about 150 pips to expect for the week in a bullish move. So coming to this new day, which is a Tuesday. Again, this is a bearish fragmented move. Since we are still in a bullish weekly directional bias, we'll take a buy where we'll see a bearish fragmented move instead of taking a sell there. So take a buy and then hold until a next impulse is terminated. So until we see the next impulse that gets terminated, you hold your entry. So right now, the entry taken here at 1.2271 is still to be held until we see an impulse in a bullish bias that gets terminated. So that is how this week has gone, and we are continuing to trade according to our rules for entry. So initially I explained that this is going opposite what we already know about our entry, because this is a trend entry, and in trend entries the market makes a move, a sort of impulse, correction, impulse, correction, impulse, correction. So you see those attempt at correction will give you, if your market was a bullish market bias, then the impulse will be bullish, the correction will be fragmented bearish, impulse bullish, correction will be fragmented bearish, impulse bullish, correction will be fragmented bearish. So that is why you are entering on the fragmented move, third entry or third candle, which becomes your entry candle. So the same thing happens in a bearish market. Impulse will be bearish, correction will be a fragmented bullish. Impulse bearish, correction will be fragmented bullish. Impulse bearish, and you have three levels of that for that move to be complete. So we have how many? We have the fragmented bearish 1, fragmented bearish 2 here. So we still have another one here, which is fragmented bearish 3. So once we have those three levels of fragmented move, we now start expecting the big impulse move, which is yet to happen here. So going by the rule that has been stated, trading the trend phase is not exactly as trading the correction, and also we have to state the rules as they come, and you know when to apply them as applies to your trading in the fast trade fair. So that will be all for now, as we look forward to having you live to put all of this into practice and make your money from this. Welcome.